Welcome to the Experts on Mortgage podcast, the official podcast of the CMB Society. I'm your host, Mike Eshelman, and I have Brian Vieaux of FinLocker with us today. Brian, thank you so much for joining. How's your day going so far?
It's going great, Mike. It's going great. And it's great for you and I to finally connect after a long time. It's been overdue, but I'm excited to come on and talk with you today.
Yeah, it's quite interesting. I've clearly seen your name around the CMB Society and all that you do with FinLocker. And we were just, right before we hit the record button, we were talking about how busy you've been today. I know you from a lot of the podcasts, a lot of videos. You're all around the industry, which is phenomenal. And you've had quite the busy day today with a lot of podcasts.
Yeah, I mean, I would like to think that it's because I'm such a high profile guy, but the reality of it is I'm in a startup platform, and you just got to do what you got to do to build awareness. So
yeah, I hear you on that. Well, thanks again for joining. First, let's get started with you've been in the industry, you became a CMB. Can you give me a little bit of background about how you found out about the certified mortgage banker designation? What was your journey like? What has it done for your career?
Yeah, I love it. So I started in mortgage banking in 1991. Started with today we would call it an independent mortgage banker. We were just a mortgage company back then. And we were a large mortgage company. It was a company called Source One Mortgage, was formerly known as Fireman's Fund. And at the time in the early 90s, we grew to be the second largest Ginnie Mae originator and servicer. And we were acquired by Citibank in 1999. And if you think about Citibank back then, was really known as a jumbo arm, portfolio lender, but they were also rapidly trying to expand, and they needed help in the CRA space, originating CRA eligible loans. There's not a lot of CRA loans in the jumbo arm portfolio. Sure. So being a Ginnie Mae originator, we opened up, channels for them. So 99, we were acquired by Citi. And from that point forward, through the rest of my mortgage banking career, I worked in large regulated financial institutions. So I ran the correspondent business at Citi, went and built a startup correspondent channel at IndyMac, all the way to the fateful, July 8th, 2008, when we were no longer around. And then ended up, most recently, I ran the third-party origination business for Flagstar Bank before leaving the cushy confines of corporate America and putting my toe in the startup world, which I understand you're doing right now as we speak.
I am. That is true.
So my career kind of spanned a bunch of different areas of mortgage banking, mostly on the production side and mostly production management, dabbling a little bit in servicing, really understanding capital markets. And I first learned about this thing called the certified mortgage banker. I think it was probably 2001 when I first heard about it. And at that point, I didn't have enough points to qualify. And those would have been like attending a conference and some other, all the other stuff that they looked at back then. So I kind of made it a plan to spend the next 18 months to gather my points so that I could at least have the privilege of getting grilled for 6 hours on the written exam. So I formally started the process in 2003, which is not a good time to do it when I was literally going to start a business inside of IndyMac. So finally in 2005, a group of us who were at IndyMac, and one of the godfathers of the CMB, PJ Harrigan, who I'm sure everybody's aware of, kind of led the charge for us at IndyMac. And we had a goal inside the company to supplant Wells Fargo as the having the highest number of CMBs per capita. And even our CEO at the time, Mike Perry, got his designation. So a group of us kind of plowed through to the end and got our CMBs in 2005. And I ran a correspondent team. I'm super proud of this, that at one point, I think we had 16 or 17 CMBs on our correspondent sales team. It was pretty cool.
That's amazing. Yeah, that's great. PJ has been on the podcast. PJ was my School of Mortgage Banking 1 instructor with his bow tie.
Oh yeah.
Phenomenal guys. So
His study packet, in the early 2000s through the late 2000s got a lot of mileage.
I'm sure it's still circulating, actually.
Oh yeah.
Well, today you're joining us to talk about the early journey, first-time home buyer engagement strategies, which in this market is obviously incredibly important, right? Refinances are very few and far between. It's just an incredibly interesting market, but the vast majority of transactions that are occurring are purchases, and in particular for first-time home buyers, there's a lot of questions, right? Rates are up, prices are up. So very interesting topic. Thanks for joining to talk about it. So what trends are you seeing with lenders and loan officers today as it pertains to first-time home buyers?
Yeah, so there's quite a few, and we'll be able to kind of riff on a couple of these topics because it's like happening in real time, it feels like. So probably the first trend is the time it's taking the average first-time home buyer who starts on a day. They don't just magically wake up one day and say, oh, I'm going to go buy a house today. They go through this emotional and financial preparation process. It's seemingly starting earlier, that process. They're not buying any earlier because there's no inventory, but their process to get themselves ready is starting earlier. And the trend that is most interesting to me that I'm seeing is that lenders and loan officers are kind of figuring out that if they don't find a way to be in those conversations 6, 12, 18, 24 months before someone's ready, it's too late. They're going to miss out for all kinds of different reasons. And so I'm excited to see how many loan officers are kind of stepping up and figuring out how to be visible to that population. And there's a bunch of different ways. So that's one trend. And I think probably the bigger underlying issue is the fact that young people coming out of high school or coming out of college are not coming out financially prepared. They have not been schooled in personal, finance, right? Some states are starting to kind of, enact policies, but that's going to take time to kind of root itself and add benefit. And so there's a massive gap for folks coming into their professional lives from a financial literacy perspective. And I think the reality of it is financial advisors aren't necessarily incented to step in and be that source of education for those folks, because financial advisors need to do that for people that have assets. And most of these young people they don't necessarily have the assets. So in my view, and I'm happy to say I'm seeing a lot of loan officers and lenders think the same way, the local loan officer is actually uniquely positioned to be a source of financial education, financial literacy, and certainly home ownership, preparation and readiness.
Yeah, it makes a lot of sense that being in the conversation early and capturing that intent, not just being in the conversation early, but contributing with good, valuable insights as to how to prepare someone to buy a home versus, hey, you need to just do X, Y, Z, see you later.
Yeah. Call me when you're ready.
Call me when you're ready, right? That's a lot of what is traditionally said. And then that phone call never comes.
Nope.
So with FinLocker, I mean, how are your clients? Well, I guess first give an explanation, an overview of FinLocker, and then how are lenders using the FinLocker solution as part of their lead generation and nurturing strategy to kind of help nurture those first-time home buyers in particular?
Yeah, I'll start with just a brief kind of where we started, and then quickly get to where we are today, because it's worth understanding. So the company was founded, 5.5, 6 years ago, and really was trying to solve a point in the loan manufacturing process. And that point was what we know today as, digital asset verification. But at its onset, it was less about asset verification. It was more about helping loan processors and underwriters streamline their review of a consumer's bank statements by not having to sift through pages, but actually being able to take data and then parse it out and analyze it. And so that's what became digital asset verification, also synonymous with D1C, day one certainty, from Fannie Mae from an asset verification perspective. And we still do that. That's an output or a result of what we do today. It's not our core, it's not our main focus. But the concept that was created, or the technology that was created to enable a consumer to securely share their bank data, was this concept of a financial locker, shortened to FinLocker, right? So the idea was consumer creates a locker, credentials into their bank account in the locker, and then once they've done that, we're able to bring all their transactional data in historically, and then stack on data on a daily basis. And then the consumer would be able to securely share access to that with their loan processor or loan officer. So that was the genesis of the business. Probably predated the market readiness, the willingness of a loan officer to ask their customer to quote unquote give up their bank credentials, right?
Right.
So the pivot point was, we've got something here, some technology here. Perhaps we can build something broader on top of this concept of a financial locker. And that's really what exists today, is this holistic consumer financial fitness experience that happens to point to mortgage readiness as an outcome. So I'll describe kind of at a high level how some of the things work in the data that is aggregated and curated for the consumer. And then I'll explain how the journeys then are created on top of that. So in this financial fitness experience, which is a white labeled solution, so our clients are independent mortgage bankers, credit unions, community banks, even some mortgage brokers. We have mortgage brokers as clients, and we can even work with one-off loan officers, where the loan officer is the primary, featured person, if you will, for the consumer inside the app. But we essentially allow a consumer to link to their credit, so they can get their credit report, credit score. They can simulate changes to their credit if they were to take certain actions like paying down, paying off credit, things like that. We allow the user still to link to their asset accounts, checking, savings, investment, 401k, life insurance, but also the liability side of that personal ledger. So charge cards, gas cards, credit cards, student loans, auto loans, et cetera. And now the consumer truly has kind of this single pane of glass view of their entire financial life. And now if we paint the picture of a first-time home buyer who's early in that journey, one of the first things that first-time home buyer is going to do is kind of understand their overall financial picture, which includes credit, includes their savings for a down payment, it includes their income and their employment and the monthly payments they have for liabilities, all the things that lenders look at to evaluate the credit worthiness of a consumer. Consumer is going to do that just in a different format. And now we give them the tool to look at their own data, much the way the lender is going to look at it when it's time to get approved. And one of the things that we understand with the next generation home buyer, kind of the Gen Z population, is there's a fear of being judged. There's a fear of being told no. And so a tool like FinLocker kind of gives that younger prospective home buyer a little bit of a sandbox to play with their own information. And then when they're ready and they feel confident on their readiness, we still enable this secure sharing of that data directly to that sponsor, lender, loan officer who gave them the tool to begin with. So we're really taking that consumer permission data, credit, assets, income, and employment, and then we build an experience on top of it that takes the consumer from where they are today on that journey. So maybe maybe they say they want to be ready 12 months from now. The app's now going to take them on a 12-month journey, getting them to a place where they can confidently apply and feel confident when they do apply that they're going to get approved.
So what would you say is the difference for someone who comes in, or what are kind of maybe the trends that you're seeing? If someone comes in and says, I want to be ready in 3 months versus someone who wants to be ready in 12 months, how is that experience curated for them?
Yeah. So, I mean, typically it's going to be, the difference is going to be if they say they want to be ready in 3 months, they probably have already been at this for 6 or 9 months anyway. Right. So they probably already have enough savings. And so for anything inside of 90 days, there's honestly not a lot that technology is going to do to accelerate that. You know, if someone's
almost like double checking.
Yeah, it's really the way I think about this in the current context of today's first-time home buyers, which my son and his girlfriend just went through this. They bought their first home, closed on it. But before that, I think they had put offers on 5 or 6 other homes and were outbid. So one of the things that a consumer who's closer to that emotional readiness can do is have everything organized and ready. And so that's where our app can help that someone that's nearer readiness, just get everything here so that you're in the best position when a property becomes available to get your offer, in and accepted. So, but inside of 90 days, I'm not going to lie to you and tell you that my tool is going to help someone improve their credit by 20 points or accelerate their saving for a down payment.
Yeah, sure.
But beyond 90 days, that's where the tool can start doing things like the credit simulator could help somebody understand if they were to pay down, some of the balances in their outstanding credit cards by $5,000, that could have a 20-point improvement on their credit score, which could be the difference between A, being approved or not, but it also significantly impacts the cost of financing, the rate and the pricing.
Well, and whichever loan officer company was responsible for introducing the relationship to FinLocker that led to a 20-point increase. I mean, that's just a feel good.
Yes.
Now you feel this, somewhat this obligation. I mean, you just had a great experience with this loan officer who introduced you to a phenomenal tool. The likelihood of going back to actually get your loan done has to be significantly increased.
Here's how I would go even a step deeper on that, because I'm not a believer that tech alone is going to solve for, the financial literacy and readiness gap. I believe that good tech, and we have good tech and a really good, user experience, but I think good tech with a experienced professional mortgage professional, to me, that's the difference. I talk a lot about scaling locally. That's how the local loan officer can compete with the biggest of the big brands who have a lot of marketing dollars, but what they don't have is the tech and that hyper local, mortgage expert who's going to be my mentor, my coach along this financial journey. I think the two together is a game changer. Yeah. And when you have the two together, there's it's almost impossible for that consumer, once they achieve that place of readiness, not to partner with you.
Yeah, completely agree. So what else have you learned with regards to, you mentioned Gen Z and kind of the mindset. What else are you seeing with Gen Z as first-time home buyers? And really, how should the loan officers or lenders be adjusting the needs for that modern home buyer?
I would start with where they go today to learn. Mm-hmm. And it's been a kind of a rapid education for me on TikTok and Instagram. It is amazing that, and we just did a study, FinLocker sponsored a study. It was a group of students at University of Southern California, probably right in your backyard.
Alma mater.
What is it? Fight? Is it Fight On? Is that?
Come on, let's get the.
Oh, that one. Oh no, this is TCU. so this group of students at USC did a study, and they surveyed their peers about their thoughts and views on home ownership, even though that group is probably 8 years away. And this is our second year doing this study. And this particular study was super interesting. And what we found out was, besides their parents, the number two source besides parents for financial literacy and education is social media.
Yeah.
It's TikTok, it's Instagram, and they've got their finfluencers that they follow, their financial influencers who they're learning from. And so what's been cool to watch is, I follow now about 200 loan officers on these platforms, and this is becoming not even a trend anymore. It's reality. This is where the next generation homeowner is learning. And so loan officers are figuring out how to get into the conversation there. And there's some really creative folks that are making access to the information entertaining but very beneficial. And we've been fortunate enough to partner with a few, and we've seen unbelievable results. I'll give you a brief sneak peek into a case study that I'll publish. So we had a client whose primary lead generation comes from social media, organic, and they're not doing paid stuff. It's organic. Wow. So they have two, today they have two, and I think they're expanding to 3, but they have 2 influencer or finfluencers, I like to call them, who are principally talking about, talking to first-time home buyers about what it means to be a homeowner and get ready for that. And they do it in the form of storytelling and using real life examples. And these 2 folks have over 400,000 followers among the 2 of them. So they've been at it building this following. And we help them expand how they talk to their communities by introducing their version, their branded version of FinLocker. They've now expanded their content to not just talk about home ownership, but now they talk about holistic financial wellness, financial fitness, and they use the components of FinLocker, the credit tools, the budgeting tools, the goal setting tools, and are building specific content around those components. And so in early May, they issued their first post or video, and they've done, I think, 4 or 5 over the course of the first 5 weeks. 4,400 consumers from their social media following downloaded this app. So when you think about, lead gen, a lot of us think about short form, long form leads,
yeah.
Right?
Yeah.
At a minimum, if someone just downloaded the app but did nothing but downloaded it, you got a short form. You have first name, last name, email address, and their mobile number.
Yeah.
But most people, like 90+%, do a little bit more than just download the app with that information. They're linking their credit, linking their assets. They're answering the first question that the app asks them, which is, where are you on your homeownership journey? I'm ready now. I'm getting ready. I hit a speed bump. I need help. And so those data points are gold for this loan officer. And then the app starts to engage that consumer over the weeks and months that follow, and pulls them deeper into the experience, but also directly has them connected with the lender and the loan officer. So for me, I would say that the trend of social media, if there's loan officers or lenders on here that aren't supporting that. So if you're a lender and you don't support your loan officers and you're not helping them build their personal brand on social, you're missing a massive opportunity. And if you're an individual loan officer and you're not building your own personal brand on top of your corporate brand, you're missing a huge opportunity. And I think that's one of the most exciting things that I'm seeing out there right now.
Yeah. And we can get into a whole nother discussion, be a whole other podcast talking about, my background's marketing, been in the mortgage industry 20 years. And it's at large companies, especially consumer direct organizations, it's a beast to get loan officers on social media, not because the loan officers aren't willing, but because you have legal compliance concerns, hurdles, right? There's lots to it. And so it's this open field for someone who wants to go on. Second, especially the environment we're in, refinances, you can buy a lead and you try and as soon as you could sell them, you can lock them. Purchase, totally different story. So what's important is educating the consumer and getting some of that mind share. So where the consumer is spending time, being able to educate them, and those who are seen as educating the consumer the most to get them from point A to point B is in all likelihood going to win the deal. 4,400 leads off of social media by educating people organically. Those are the best quality leads you can possibly get. Fast forward 1 year, how many of those are turning into people who are actually buying?
Yeah.
And how many are going back to that loan officer? That's an amazing pipeline.
Yeah, we were surprised, pleasantly surprised, because this was our first partner that is using that channel at scale, I'll call it, right? And I'm not trying to say that every loan officer is going to have those same results, because these guys have built their following. But even if you have 2,000 followers, the other cool thing that we saw, again, in the short 5-6 week span, was both of those financial influencers, their followers grew by 10 or 15% over the same time. So I can't say that it was 100% attributable to the fact that they were talking about this other set of tools that they have, but some of it impacted that. So they were able to grow their following at the same time. But I believe that a loan officer who has 500 followers will get something out of that. I mean, these are, you have to be doing, as a local loan officer, you're either going to embrace these type of platforms, or you're frankly everything's going to pass you by, because you can only do so much. You can only scale yourself in your community, doing seminars as an example, so much. There's only so much of you to go around. Using technology and socials, definitely technology, is a way to scale your message and scale your personal brand.
That's phenomenal. That's a great spot to finish up here. Brian, I appreciate you for joining, and absolutely thrilled that we got the chance to finally meet as well. So thank you for joining the Experts on Mortgage podcast, and I look forward to talking to you and hearing from you again soon.
Thanks, Mike.
Thanks, Brian.